The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Breakout Investing is now 5 days a week on TFNN from 3 to 4 Eastern. Thanks very much for tuning in. If you want to give me a call, please do so. Got some nice calls yesterday. The number is toll-free, 877-927-6648, 877-927-6648. You can get my show as a podcast on iTunes if you can't listen live. That's a good deal. And also, if you want to listen to the stream on your smartphone, you're out and about, taking a walk, taking a run, plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget to check out Tiger TV on the homepage of tfnn.com. Channel 1, the show is carried live. Channel 13, it is archived. When you watch Tiger TV as my show is going on, not only do you hear the audio, but you can also look at charts right along with me as I look at them on my screen, and Tiger TV is also viewable on your handheld device as well. Taking a look at a chart of Apple here before we get into the major averages. Apple definitely acting a little bit squirrely here ahead of their press event tomorrow, where they're going to talk about the iPhone 5. We may get a little more insight into this smaller, cheaper iPad. Maybe the iPad mini could see a refresh in some iPod digital music player product line. But as far as the iPhone 5 is concerned, probably going to see a larger screen, thinner body, faster processor. Not sure about battery life. That would be good to squeeze a little more battery life out of the batteries that they have in there. You'll also probably be able to have the ability to connect to high-speed LTE networks. So, I said yesterday, I think it was, that Apple headed into this week is working on 6 straight or has 6 straight weekly price gains. If it closes higher again this week, that would be 7 straight weekly price gains. So what does that mean? A lot of good news has been priced in quickly here, no doubt about it. You can see Apple's recent breakout over, what was that? About the $610 price level. This is a current holding in my Ultimate Growth Stocks model portfolio. And what I'm a little concerned about is that Apple has given up its 20-day moving average today. It broke through the 10-day moving average yesterday with conviction. There was a little juice behind the selling, and today it undercut its 20-day moving average at 662 thereabouts. So shares of Apple right now down $3.60. 0.5% to $659.14. So we'll see. I mean, it's entirely possible. It seems like almost too easy a call to say that Apple is going to sell the news after it's rallied so much into this press event tomorrow. Certainly a sell the news situation is entirely possible. Just like on Thursday when the 2-day Fed meeting ends, we could get a sell the news situation there too, depending on what the Fed announces at the end of its 2-day meeting on Thursday. So we'll see. We'll see how that plays out. Volume in the market today. Well, I'll tell you what. Before we talk about volume, why don't we just take a look at the major averages here, starting with the NASDAQ Composite. NASDAQ Composite trading in a tight range today, near its session low, now up just a fraction, not quite 1 point to 3,105, call it. So NASDAQ off its high, but still up a little less than a point. The S&P 500, check in on that on Tiger TV, and we'll see that S&P 500 holding its breakout very, very nicely. There has been definitely selling in the NASDAQ Composite, not only yesterday but today as well. The S&P 500 looking pretty good here, up close to 5 points, 0.3% to 1434 thereabouts. So market technicals continue to look pretty good here. Taking a look at volume. on the exchanges today. At last check, it was tracking just a little bit higher than what we saw yesterday. Not by much, though. Yesterday we had about 611 million shares on the New York Stock Exchange. Volume on the NASDAQ was right around 1.54 billion. We're tracking a few percentage points higher than that today. So not a whole lot of volume today. Pretty quiet in terms of economic data this week. Tomorrow we're going to get a look at import-export prices for August, also wholesale inventory data for July. Not really market-moving events there. Thursday, weekly jobless claims, the latest reading on wholesale prices from the Producer Price Index, and also the two-day Fed meeting, like I said, concludes on Thursday. We'll see if we'll get more stimulus from the FOMC. Friday, pretty busy day of economic data. We've got retail sales for August. We've got the Consumer Price Index, industrial production, capacity utilization, and also the first reading on consumer confidence from the University of Michigan for the month of September. Also tomorrow, don't forget the decision from Germany's Federal Constitutional Court that will determine the fate of the Eurozone's rescue fund called the ESM, or the European Stability Mechanism. It's the way that that Europe is going to be able to buy bonds to keep borrowing loss for some of these sovereign nations, Spain, Italy, and the like. So we'll see what the German court has to say about that tomorrow. And then, of course, Apple, their iPhone 5 event. So keep a close eye on that. Let's take a look at shares of Google here. Also under pressure. There was a little Apple headline that was related to Google today. Let's take a look at shares of Google. It's been under pressure for 2 days in a row, just like Apple. Let me pull up I think I have a chart in here. Yeah. Here's Google still holding above its 10-day moving average. You can see here, this is the blue line, very short-term support level, the 10-day moving average. It is still holding above its 20-day moving average at 681 and well above its 50-day line at 638. But shares of Google today down about 1% to 693.95. Earlier today, Google unveiled its own YouTube iPhone app. Normally, when you buy an iPhone, it's got that YouTube icon installed right on the phone. But that was for the iOS device. But with the iOS 6 operating system that's going to be on the new iPhone, that YouTube app is not going to be on there. So Google launched its own YouTube iPhone app today. So that's a quick headline about Google. Taking a look at some headlines today, we had some luxury retail under quite a bit of pressure today. Luxury designer label Burberry Group, they're based in the UK. They issued a profit warning that weighed on shares of a lot of quote-unquote luxury retailers that list in the US. Here's a look at Michael Kors, down 74 cents today, 1.4% to 52.76. Still holding well above a previous buying area and that $48 range, so not really seeing anything serious. It's been a stock that has been, in a big uptrend here in recent weeks. So a little bit of profit taking. Going to expect this one to firm up at support pretty soon. But other luxury names like Tiffany. Really, the whole group is falling today. Tiffany down 1.2% to 62.27, and we can check in on shares of Coach as well, under pressure today, down 1.7% to 61.52. Again, all that brought about by a earnings warning from UK-based Burberry Group. So we'll see about that. How the luxury retailers fare from here. Taking a look inside the Dow, shares of McDonald's. Probably a lot of bad news already priced into this name. It's been a real sluggish performer for quite some time. It had been working on a 4-session winning streak headed into today. It was nicely higher early in the session, but is now near its session low, up only 4 cents to 91.34 after hitting an intraday high of 92.10. Saw same-store sales data from McDonald's earlier today. Overall sales were up 3.7%, a little below expectations. In the U.S., same-store sales rose 3%. In Europe, 3.1%. Those were also slightly below expectations. So to look at shares of McDonald's. Other headlines today, take a look at Green Mountain Coffee. Green Mountain Coffee all of a sudden coming back to life here. This, to me looks like a dead cat bounce. Not clear at all that this is ready to start a new uptrend, especially since it's still below its 200-day moving average here around 39. Shares of Green Mountain today outperforming nicely, up 5% to 31.87. Still has about 7 points to go to get back to its 200-day moving average. Italian coffee maker Luigi Lavazza, a rival, increased its stake in Green Mountain to 6.8%. So investors took that as good news. Remember, last week, Green Mountain announced plans to roll out coffee, tea, and fruit drinks that include antioxidants and vitamins. Late last week, Lazard Capital started Green Mountain with a buy rating. Also, Roth Capital said upcoming patent expirations for GMCR's K-Cup technology are already priced into the stock. So the bulls will say all the bad news is priced in here. The bears will say this is still a technically damaged stock where any strength should be sold into. So personally, I'm not a fan of Green Mountain. There was a time to make money in this stock, but there's a lot of uncertainty about this company's business, no doubt about it. Take a look at United Natural Foods. We saw earnings from United Natural earlier today. Stock taking a big hit today. Distributor of organic and natural foods, down $4.93 today, 8.2% to $55.50. You can see this support level here, the 50-day moving average. The stock hit an intraday low of 53.35, so it did break below the 50-day line. It is now trading slightly above the 50-day moving average here. Still, even though it appears to be finding support at the 50-day moving average, I would not touch this stock. Yes, it was a $61 stock yesterday. It's about $55 now, so it looks like it's on sale, but there were some margin concerns here in earnings, and their outlook for 2013 was not all that hot. Earnings were up 19% from a year ago to 51 cents a share, in line with expectations. Sales were up 16% to $1.34 billion, just a hair above estimates there. But looking forward into 2013, it forecast earnings per share $2.14 to $2.24. The consensus estimate was $2.25. So this is a stock that really has done not much wrong in recent weeks, but under a lot of selling pressure today. Here's another little-known stock that reported earnings, Casey's General Stores. They operate convenience stores in the Midwest. Here's another situation. A stock, gaps above its 50-day moving average, shows very bullish price action, hits an intraday high of 60. Now it's trading below its 50-day moving average at 58.25. So not a great day of price performance here, even though the stock is up close to 5% on the day. It is trading near its session low. Earnings down 2% from a year ago to $1.01 a share. Sales were flat at $1.87 billion. All right, folks, thanks very much for tuning in. Headed into break number one. We're going to be back in a flash. You're listening to Breakout Investing on TFNN. Lots more to come. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Indices trying to hold on to gains here. Not working that well for the NASDAQ. Composite tech stocks under pressure for a second day in a row. NASDAQ has now turned negative, down a little more than 4 points to 3,099. Dow still outperforming, up 61 points, 0.5% to 13,315, and the S&P 500 up a little more than 3 points to 1432. Checking in on the U.S. dollar index here. At last check, the U.S. dollar index was under more pressure today. It down 42 ticks to 79.83. The greenback index undercut its 200-day moving average on Friday. Was up a little bit on Monday yesterday, but falling apart again today. That is not helping the market much. Normally, that when that dollar weakens, it brings buyers into the market. So Dow and S&P 500 still positive today. Tech stocks lagging again. Checking in on crude oil here. We had crude oil up 63 cents to $97.17 a barrel. Some interesting setups in the oil and gas sector. I wanted to take a look at Ensco. This is a UK-based oil driller, setting up in a really nice handle area here not out of the question that ENSCO could try for a breakout soon over $58.02. That would be the high point in the handle area right here. So it's only about 50 cents or so from that swing point, acting well in this market. Also in the drilling group, let's take a look at RDC. That would be Rowan Companies. Nice breakout for this stock over $36.51. It is working on 4 straight gains here. Here was the swing point of 36.51. Growth prospects very, very big at Rowan Companies. That's good to see. Annual earnings this year expected to be up 81% from 2011, and then next year up 70%. So you're looking at annual earnings growth of 81% and 70% over the next couple of years. So this stock acting quite well. Gold up a little bit, $3.10 today, 0.2% to $1,734.90 an ounce. Check in on the GLD here, the Spider Gold Trust. Big move for the GLD last week. Obviously, the strength in gold is in anticipation of what the Fed could say on Thursday. So dollar continues to act weak. Gold continues to move higher. So we'll see how that all plays out. A couple of new issues I mentioned on yesterday's show. Reported earnings today. Let's take a look at Five Below. They came public in July at $17 a share. Has been a very, very outstanding performer in the market. Hit an intraday low of 31.20 today. It is back up near its session high, but still down a little more than 5% to 32.97. But a lot of buyers came into Five Below when it went down to that $31 level. So not too bad a day of price performance here. The earnings weren't bad, but this is, bottom line, it's a high multiple stock that's held to a very high standard when it reports earnings. They earned 4 cents a share. The estimate was for a penny, so it was nicely above estimates there. The 4 cents a share was flat from a year ago. Sales were up 40% to $86.8 million. The estimate was for $82 million. So good top line, bottom line beat, but it was the second straight quarter of decelerating sales growth on a sequential basis. So again, when you're a high multiple stock, you can't just report good earnings. They have to be great. You have to knock the cover off the ball, and it was just a good report from Five Below. Of course, this is a company that sells merchandise, as the name of the company indicates, $5 and below. They cater to the teen crowd. Same-store sales were up 8.6%, and the company opened 27 new stores in the quarter, ended the quarter with 226 stores in 18 states. I still think this is a retailer that does have quite a bit of potential. Anytime you're looking at specialty retailer, it's good to focus on the new issues, those that are with a new business, a new product, new concept that are growing earnings and sales rapidly, and Five Below still fits the bill there. Another tech name that came public in July that has been an outstanding performer, Palo Alto Networks. They make firewall technology that basically protects computer networks. It lost 7 cents a share, but sales were up 88% to $75.6 million. Company said it added more than 1,000 new customers during the period, bringing its total customer count to more than 9,000. So Palo Alto Networks, despite another quarter of strong top-line growth, shares are down 7% today to 66.62. So that's it on earnings. We'll come back, talk about some other interesting setups in this market, and talk about a busy week of headlines still to come. We'll do that when we come back. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Haven't taken a look at the VIX yet today. Big move for the VIX yesterday, but as you can see, the CBOE Volatility Index still stuck underneath its 50-day moving average. Here it is up just 2 cents today to 1630. So I would suspect that the 50-day moving average, it wasn't resistance last time around when the VIX popped over the 50-day line, but you can see it was only above there for 2 or 3 days before it crashed below the 50-day line again. So if the VIX is able to recapture its 50-day moving average, currently at 1656, then I would expect additional resistance at its 200-day moving average at 1935. So we'll see how the story in the VIX plays out in coming days. Definitely a lot of fireworks in the market Coming up, we do have, like I said, this German court ruling tomorrow about the European Stability Mechanism. That's that pool of money that the ECB can use to buy bonds of these countries that are in financial disarray. We've got the Apple iPhone 5 press event tomorrow. We've got the start of the two-day Fed meeting as well, and the conclusion of that meeting on Thursday. I also wanted to take, we talked about the weak dollar today, not helping the stock market that much, but also wanted to take a look at the FXE. This is the ETF that tracks the price of the euro. It's the currency shares Euro Trust, and this is at a key technical level as well. You can see a big, strong rally for the euro since early August, thereabouts, but look at it here. It's coming right up to its 200-day moving average at 127.93. Where is the FXE trading right now? 127.78. So it is sitting right at a potential resistance level here. We'll see if the FXE can pop above the 200-day moving average in coming days. Could be a resistance level, or it may not be, but it is at a key technical level right now, sitting just underneath its 200-day moving average. Wanted to take a look at shares of Western Digital, WDC. Remember the news yesterday, CEO John Coyne announced his retirement. He's going to be replaced by Steve Milligan, who had the title of current president. That's going to take place January 2nd, 2013. Western Digital is still hanging in there. The stock is outperforming today, up 2.4% to 42.18. We'll switch the view here, take a look at a weekly chart for Western Digital, and this is actually a good candidate for support at the 10-week moving average. When a stock breaks out, doesn't make much progress, or it can even break out and make progress, but usually, sellers are going to come in, the stock's going to pull back a little bit. So you do have a pullback to the 10-week moving average going on here for Western Digital. The 10-week line is at 40.35. So if we do see some softness in the market, Western Digital is a strong enough stock where I would expect there'd be a pretty good chance that it would find support right around that $40 price level, and that would be probably not a bad opportunity to start a small position. Meanwhile, a lot of interesting stocks out there still acting well. Let's take a look at Align Technology, ALGN. Align is, they're known for the Invisalign. In fact, my kid is just getting his braces off. He didn't use Align's teeth straightening system, but I think he's going to have a retainer or something made by Align. Anyway, the stock is still outperforming, up another 1.7% today to 38.13. This was a recent breakout from what looks to me like a rare ascending base pattern. So I'm going to switch over, take a look at a weekly chart for Align. You'll see a big breakout earlier this year, and then three pullbacks. 1, 2, 3 pullbacks. Where it corrected anywhere from 10 to 20% off its recent high, and then it just broke out over that resistance level of 36.10. So right now it's at 38.13. It's kind of borderline extended, but this is a pretty rare technical pattern. I learned to recognize the ascending base during my years working with Bill O'Neill over at Investors Business Daily. This is a chart pattern that he coined and has seen time and time again in the market. It is a rare pattern, but strong stocks can form these types of patterns, and it looks like one to me for Align Technology. It's often a counterintuitive buy because you can see Align, was a $24 stock not that long ago, and it has made a big price move, but the fact that it pulled back 3 times quickly after a breakout does make it, in my opinion, an ascending base pattern. So Align Technology still acting well. Let's also take a look at QIHU. This is a China-based company, Qihu 360 Technology. This is the stock that has been causing problems for Baidu, because Qihoo recently announced a new search engine in China. Qihoo is a China-based provider of internet and mobile security products. Big growth here. Annual earnings this year expected to be up 39% from last year, 54% next year. But again, Baidu has been under a lot of selling pressure after Qihoo launched a new search engine. Stock is outperforming nicely today, and it is in a good technical setup here. It is up 4.8% to 2402. Okay, we'll look at a weekly chart for Qihoo, and we'll see a tight consolidation here. Stock, to me, looks poised for a possible breakout over $24.88. That's the swing point to look at if it does decide to take out that price level in heavy volume. You know, breakout during a market uptrend, probably not a bad buy. Take a look at shares of Visa as well. Visa coming back to life today, actually making a nice move, up 2.3% to 131.62. What's going on with Visa? Well, it looks to me like a breakout from a bullish base on base pattern. Swing over, take a look at a weekly chart for Visa. You'll see the first base that formed right here, a second little consolidation here, and you do have a swing point for Visa of 132.58. So it hasn't broken out yet, but you know, another stock that is acting very well in this market, and decent volume in Visa today too. At last check, volume was tracking nicely above average, so also coming in on pace to come in much higher than Monday's level. So sitting just underneath the swing point here, but Visa looking a lot better to me, frankly, than MasterCard. MasterCard has been doing a little better. Really, MasterCard started to rally on hopes that Europe is getting its house in order, because MasterCard has a lot more exposure to Europe than Visa does. So that's why MasterCard is a bit more of a laggard stock here, but you can see working on 4 straight price gains, really has come back to life. Decent volume. MasterCard up 1.7% today to 444.79. So Visa is still my pick out of the two. Take a look at CTRX, which is Catamaran Corporation. This is another provider of pharmacy benefit management services. Stock hit an intraday high today of 96.44. Kind of ugly price action, though. It is still up 1.1%, but trading near its session low at 92.97. I was a little bit interested in this stock earlier in the session, but looking at the way it has reversed today, maybe not so much at this point, but here's a weekly chart of Catamaran, and you do have the right side of a base forming here. It recently climbed above its 10-week moving average, so this one's not ready yet. It's just a base-building stock. It does have top fundamentals. Earlier this year, Catamaran bought Catalyst Health Solutions, and that has fueled nice top-line growth for Catamaran in recent quarters. So Catamaran recently changed its name, changed its ticker symbol. It used to be known as SXC Health Solutions. So interesting stock here, still building a base, but acting better, and has potential. Some stocks I wouldn't touch with a 10-foot pole here, even though it is tempting. Rackspace Hosting. You can see the huge move the stock has made since early August. Really needs to base. It needs to consolidate here. If you're buying up at $64 a share, you're buying an extended stock flat out, and that is generally risky business. So avoid the temptation. Fundamentals are outstanding at Rackspace Hosting. They're a provider of web hosting services, another one of these cloud plays. But it is extended right here, and you do not want to chase a stock that where the train has already left the station. And I would say that is definitely the case with Rackspace Hosting. Let's also take a look at CDNS, another strong performer in the market here. Cadence Design Systems, pretty good fundamentals here too. But this is another one not to chase after a recent breakout back here in July, over $12 a share. It's just been a straight shot up. It's now trading around $13.50, so not an extravagant move, but still a stock that is extended up here. If we do get a market pullback, wouldn't be out of the ordinary at all to see Cadence Design pull back to its 50-day moving average, for example, right around 12.25. So be careful not to chase some of these stocks that have been moving higher for quite some time. Take a look at Teradata. This is a stock that not nearly as extended as the other two we just looked at. Big sellers in Teradata yesterday, though. This is stock that really showed peculiar price action on Monday. It's trying to bounce back a little bit today, up 55 cents to 75.18. Again, probably looks like it's on sale. It was, late last week. It was an $81 stock. Now it's a $75 stock. If you've been wanting to own this, I don't like all that heavy volume selling that was in the stock yesterday. So I would just watch it here and see how it trades going forward. But I'm a little wary of the heavy volume selling that was in the stock yesterday. Taking a look at Salesforce.com, another name that continues to act quite nicely, actually. CRM I was not keen on when the stock was correcting in price earlier this year, back in May, June, July, but buyers have definitely come back into the stock, and it's not it's sitting very close to a swing point here of 151.97. So Salesforce up 1% today to 150.80. And technically not looking too bad here. Of course, Salesforce.com, ticker CRM, stands for Customer Relationship Management Software. Another name in the space here that looks pretty good is NetSuite. NetSuite is setting up nicely here, up 27 cents. 0.5% today to 57.54. And I think I have a weekly of NetSuite as well. There it is. And this is really a nice technical setup. Anytime a stock trades as tightly as NetSuite is over the past 5 or 6 weeks, holding its 10-week moving average here. You did have a nice reset of the base count, so this to me looks like a second stage base breakout, even though it has made a big price move. The low right here undercut the low of a prior consolidation. That wipes the slate clean of sellers, so you've got a first stage breakout and now a potential second stage breakout taking shape for NetSuite. So that's another name that I'm watching pretty closely here. CF Industries, here's a weekly chart for CF Industries, a stock that is, after a recent breakout, still holding its 10-week moving average here, trying to find support. I kind of go back and forth on CF Industries. These fertilizer stocks are just tough to play sometimes. There are some sectors that I generally avoid as someone who embraces growth stocks and likes to buy growth stocks, and you do have some growth names in the fertilizer space, but I just find them very difficult stocks to handle for some reason. Almost feel the same way about gold stocks and also energy stocks to some degree as well. But CF Industries, recent breakout over 205, I think it was $205 a share. Got up close to 220, but it's just kind of resting at its 10-week moving average here. So CF Industries not looking too bad at all. I want to talk also about a speculative small cap name, and this is a company called Cambrex, CBM. Really holding gains nicely up here. It's a small stock trading at $12.61 right now. For the week, it's up 1.2%, holding near highs. The company is small. It has a market cap of about 350, 400 million, something like that. It's a life sciences company. Its products are used in the development and commercialization of small molecule therapeutics. So interesting technology, decent fundamentals, holding near highs. This one, again, is a candidate for support at its 10-week moving average around 11.25. A little more speculative name here that doesn't look too bad. All right, as we get ready to head into our next break here, we got a couple more names we can look at here. PPG Industries. You can see a nice breakout earlier this week for PPG Industries. This is a company that makes protective and decorative coatings, and you do have a nice breakout here over 114.62, holding gains nicely. And this one is a stock still within range here. Remember, you don't want to chase a stock when it goes more than 4 or 5% past a swing point. The swing point here was 114.62. Currently trading around 115.94, not extended yet. Looks pretty good here. All right, folks, headed into the final break. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m., and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing as we head into the close here. The NASDAQ Composite trying to turn positive for the day. It's still up just a fraction here to 3104, and the S&P 500, that is still positive, up 5 points, holding gains nicely after its breakout last week, up 5 points to 1434. So, folks, Ultimate Growth Stocks, my newsletter at TFNN. If you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. You'll see my name right on the homepage. You can also click on the newsletter tab, then investment newsletters. You can get more information there. And today's Tuesday. That means my latest weekly update went out earlier today. In between weekly updates, I send out buy and sell alerts for my Ultimate Growth Stocks model portfolio, helping subscribers navigate this market. Also, don't forget about the Tiger Dollar promotion that's going on from now until September 16th. It ends on September 16th, but if you purchase Tiger Dollars can be used to purchase anything at TFNN.com, newsletters, educational material. But if you purchase Tiger Dollars by September 16th, you can get a match anywhere from 20 to 30% on your money. So it's free money from TFNN.com. And if you take advantage of purchasing Tiger Dollars before September 16th, you'll get free access to a 5-hour online live trading workshop with Tom O'Brien. Tom will show them exactly how he trades using a live account. Tiger Dollars are always available, but you're getting a bigger match before September 16th. If you wait till after 16th, you still get a match. It's just a smaller amount. So be sure to check that out. That is a good deal going on right now at TFNN. Checking in on Pier 1 Imports ahead of its earnings report. Not tomorrow, but the next day. It's a very, very quiet week in terms of earnings. Really, the only noteworthy company that I see between now and the end of the week is Pier 1 Imports on Thursday. It is under pressure for 2 days in a row now, down 15 cents today to $19.17. And, just before the end of the show, I don't have much time, but let's head out to Oklahoma City and talk to Meek. How you doing today?
Not bad. Another hot day.
Oh, tell me about it. I'm in Southern California. Same deal.
That's right. 95. Okay.
Oh.
What can we do? What do you think about prospect of BKS? It kind of has offers to be bought by possibly going private, but still doesn't show any signs of life, and I'm holding some of it.
Yeah, it's trying to firm up here down at this $11.50 price level. I think a good argument can be made that a near-term bottom has probably been put in here. But if you're holding it, I would be a seller on any strength here. It could, if buyers come into the stock, it could make a run to maybe 13.25, 13.5. But I wouldn't be afraid to sell this one on any strength. The good news, again, it looks to be putting in a bottom here where more downside is not likely, but that's going to depend on what the market does from here.
Sounds good.
Okay.
Fantastic show. Thank you very much.
Okay, thank you, Meek. Take care.
Have a good day.
Appreciate it. All right, Meek from Oklahoma City asking about Barnes & Noble. Yeah, it's been a laggard stock for a while, trying to firm up here in the $11.50 level. So more downside. Yeah, probably a lot of bad news priced in here. But as Meek said, doesn't look like it's going to try to move higher anytime soon. But then again, firming up at that $11.50 area. All right, folks, that'll do it for this edition of Breakout Investing on TFNN. Coming up next, as always, the Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Hope you have a great afternoon. Talk to you tomorrow.